Gold may have been out of favor with investors for over a decade, but it's making a comeback in 2023. In fact, if it stays above $2,000 by the end of the month, it will mark the first time that gold has managed to close a month at that level in its history. And there's good reason to believe it will. With the US dollar under pressure, geopolitical tensions rising, and interest rates still near record highs, gold is looking to be a smart investment. Or is it? Let's talk about it. Chris and Thomas, it's great to have you both back. We're talking about good old gold today. So let's start with the factors that have contributed to the recent resurgence of gold prices. Tell us a little bit more about those. Also, how long do you think this trend is going to last?
Well, there are a couple of factors driving the price of gold right now. They include safe haven appeal, all the stimulus money from the pandemic, the rise of inflation and interest rates. And then there's just physical demand. Gold is required for technology and the build out of our ever improving technological society. So that demand is underpinning the price of gold. And I think that these trends will last for a long time. Gold is going to have volatility based on safe haven demand and interest rates and inflation. But the stimulus, all the extra money we put into the economy has put the gold price on a different level than it was before. It's never going to go back down to where it was because gold is always going to be equal to X relative to the money supply. Money supply is more, so gold is going to be worth more money. That's just a fact of life.
Chris, what are your thoughts on this?
Yeah, I really like that last point that Thomas made about gold and how it's going to always be tied to the money supply and it's not going to go down. And I think you can look at what's been going on with central banks across the world over the past year. You're seeing China, you're seeing Russia. All of these central banks are buying gold. And that means that gold prices are only really going to be going in one direction because those banks are buying it for a reason. And it's because they plan on, is because they see something there as far as having value with gold.
Mm-hmm. All right, so
Something
I'm going to ask.
Gold. I'm sorry, Lacey. This whole demand thing. Gold's a commodity, and
True.
Like most commodities, right? It's got a very finite quantities, and as far as easily recoverable gold goes in the world, we pretty much know where it all is. I mean, we haven't got it all out of the ground, but we pretty much know where it is, and so that plays a factor. I mean, we talked about peak oil last week. There's a peak gold. I mean, eventually there will only be so much gold available, and that's going to drive the price higher as well.
Yeah,
for sure. All right, well, I'm going to ask each of you this question because who doesn't like a difference in opinion? Chris, should I own physical gold or alternative gold-centric investments like mining stocks or ETFs?
Okay, so I'll start with physical gold. I've had this conversation with a number of people over a number of years. I actually became a fan of physical gold because my dad was a fan of physical gold. And my answer to you on that will be something similar, a variation of the answer that he always talked to me about, which is owning physical gold doesn't necessarily make sense to a lot of people that don't own it, right up until the point where it does make sense. This isn't about being some sort of conspiracy theorist or being a perma bear. I'm neither one of those, but it has to do with thinking about gold in similar to the way people would think about life insurance in a common sense sort of way. There's a lot of us, as a matter of fact, most of us living today that don't ever remember a time when the US dollar wasn't the world's reserve currency, but it wasn't. I mean, but it's only been, and I use only in air quotes, it's only been the world's reserve currency for 75 years. So there was a time even in our nation's history where the dollar wasn't the world's reserve currency. And to me, it just makes sense from a common sense standpoint for every investor to have a little bit of exposure to physical gold as part of their portfolio. But again, a small portion. But to answer the second part of your question, there are other ways to invest in gold, especially if you're not looking at it as a safe haven. If you're just looking at it as a trade, there's mining stocks that you can invest in. I wrote an article for MarketBeat this week about 2 junior miners to look at, as well as exchange traded funds. just like with most other sectors, there are ETFs that you can invest in that are specific to gold miners, and also that could give you more broader exposure to precious metals in general.
So Thomas, do you stack gold coins or do you invest in other gold related securities? How important is diversification in a portfolio that includes gold stocks and other asset classes or sectors that complement that investment?
And well, personally, my stack of coins is in silver. I like silver. I just prefer silver and gold are pretty identical in that regard. But like what Chris was saying, I mean, owning physical gold and owning gold stocks or gold ETFs are two different investment kind of theses. Yeah. The gold, owning physical gold is that insurance policy against inflation in the future. You never know when the market's going to go running for the hills, you know, scared out of its mind. Gold, what you're going to want to have then. But when it comes to investing, the gold stocks are a little bit different. Theoretically, they're digging money out of the ground, but it comes down to margins. So when oil prices are up and gold prices are down, they don't make as much money as when oil prices are down and gold prices are up. So as far as investing with oil, you kind of got to watch those two dynamics. As long as the company has a pretty fair reserve of gold or cash to sit on during the tough times, it'll keep working and it'll build up its reserves of gold for the good times. And then it'll start selling the gold and make some cash and pay dividends, and investors will be happy.
Yeah,
Right.
and I'll just piggyback one thing on to what Thomas just said. You know, what he said with the mining companies. Yeah, I mean, the investing in mining companies has been really out of favor for about a decade because the oil prices versus the price of gold, just that didn't work because there's a high fixed production cost of getting that gold out of the ground. And if that production cost was not paid off by the reward in the price of gold, it just doesn't make sense. That is starting to shift a little bit, but also some of these miners have contracts now where they've sort of pegged their revenue to a certain price of gold. And right now gold's well above that. So that's why it's starting to look a little bit better to start looking at mining stocks right now.
All right, final question for both of you. I'm giving you 10K each. Hypothetically, of course, don't get too excited. So you're going to invest that in gold. Where is it going?
A certain percentage of it would go towards physical gold for sure. I would actually, though, be putting the bulk of it in gold ETFs right now. If I'm looking to get into a scenario to profit off where gold prices are going, I think I'm going to look for the diversification and the relative security that's going to come from ETFs. I'd probably stay away from the mining stocks, but that would be my approach.
I have a question for you, Chris.
Yeah.
When you say the gold ETFs, are you interested in the gold tracking ETFs or the gold miner tracking ETFs?
Oh, that's a good question. I would say probably the gold track ETF. Again, not the miners. You know, if I'm going to invest in the miners, I think I might be more selective and just try to look at an individual miner to invest in, if that makes sense to you.
Right.
Rather than try to go with an ETF where you get the good with the bad, I think I might just say really try to zero in on a specific miner or two to invest in. But in Lacey's hypothetical example, if I were looking at $10,000 that was kind of just gifted to me and I'm trying to figure out where to put it right now, I'm probably just going to go the ETF route and, you know, for gold itself, the metal itself, not necessarily for mining stocks.
All right. Well,
Thomas,
I think for
what about
myself,
you?
yeah, I'd probably do a split between maybe an individual miner or an ETF, but I'd be looking for a diversified miner. So maybe 30 or 40% in physical gold. And then I look for a diversified miner that's doing gold, but also doing other industrial metals. You know, iron's a big one. And
Copper's a big one.
Copper's a big one. Titanium's a big one. But really, any miner with diversified operations, because that would just bring some more diversification into your portfolio while giving you the gold exposure.
Yeah.
All right. Well, it sounds like we can agree gold is making a comeback in 2023, right, guys?
Indeed.
Definitely.
All right, many factors contributing to that statement. We heard from Chris and Thomas where they would be investing 10K in gold. We'd love to know from our viewers if you'd spend that money differently. Let us know down below. It's so great to have you two on today. Thanks, guys. I'll chat with you soon.
Thanks, Lacey.
Thank you for having us, Lacey.